Break a leg, guys.
Hello, everyone. Welcome. Give it one more minute. Just let everyone show up, and then we can get started. Okay, let's go ahead and get started. Thanks to everyone for coming today to our space talk. We're very excited for our speaker today. Just as an introduction to the University of Chicago Space Network, so we're a group of space industry people or people who have an interest in the space industry, and we do this series called Space Talks once a month. If this is your first one, welcome. Where we invite someone who has a lot of space industry or astrophysics experience and to come and tell us a little bit about what they do and answer some questions for us. Yeah, thanks for all coming today. I'm going to hand it off to our host, Gaurav, who's going to do the interviews and introduce Jim. So Gaurav.
Thank you, Shannon, and welcome everyone to the September Space Talk. And this is a special one because this is the first anniversary of our Space Talk series. We started in September last year, and thanks a lot for all your support and attention for the Space Talk series and for being the member of the University of Chicago Space Network. Today, we are going to talk about the role of a CFO in the finance industry, and we have got a perfect speaker for that. We are pleased to welcome Jim Clarke, who is the alum of Chicago Booth and has over 35 years of experience across financial services and operational roles in commercial aviation, logistics, and space industries. During his experience, Jim has raised over $10 billion in the form of long-term enterprise and equipment capital across different economic cycles and company growth phases. He also was involved in raising $5 billion of equity and debt for Air Lease Corporation, which he helped list on the New York Stock Exchange in 2011. Most recently, he was the CFO of Ad Astra Rocket Company, which is a company dedicated to facilitating logistics in space through high-power plasma electric rocket systems. Jim has held several positions at airlines and commercial aircraft leasing platforms, including being the CEO and founder of Sky Aviation Capital, which is a boutique advisory firm focused on restructuring and long and short-term consulting within commercial aviation. Jim was also the chief investment officer at Macquarie Rotorcraft Leasing Company. He was a CFO at Eastern Airlines, Air Lease Corporation, and Aloha Airlines, and also managing director at Alvarez Marshall, Tree Capital Partners, and Skyworks Capital. Jim has a bachelor's in arts from Stanford University, a JD from Chicago Kent College of Law, and an MBA from University of Chicago Booth School of Business. Welcome, Jim, and thanks a lot for taking time to speak with us.
Absolutely happy to be here on such a special occasion. I hope I don't disappoint.
We have we have full confidence that you won't. With such a stellar background and career and experience, I'm sure there's a lot we can learn from you in the next hour. So Jim, the way we conduct these space talks is that we spend around 40 minutes talking about your experience, your background, and any guidance you might have for the audience. And then we also take questions towards the end from the audience. And for the audience, if you have any questions for Jim, please type it in the chat or raise your hand and we will invite you to ask your question during the chat. So Jim, the first question is about your, overall your experience, 35 years of experience in the industry, and even before that, growing up. What are some of the? Can you give a brief overview and talk about some of the critical decisions which helped shape your career along the way?
Sure, happy to do that. But before I do, just a quick summary of perspective about my relationship to the university. I grew up in Hinsdale. My father attended the law school and graduated in the 40s. I think we're coming on a century of 3 generations at Chicago. His brother and my cousin went to college, got their MBAs at Chicago. My older brother David and his eldest son both got their MBAs at Chicago. My wife and I met we called it the GSB back then, but we met at Booth 37 years ago. We've been married 35 years. Our daughter Gusty got her MBA at Booth 2 years ago, and she's now a junior investor in New York at Riverstone Holdings. And our son Henry was a college graduate, class of 2020, and he's at the mothership of Amazon in Seattle, and he probably will be going to Booth next year. He wasn't clear he was getting a job coming out of college during the pandemic, and so he provisionally applied to Booth and was admitted. So we have a long relationship there. I'm very, it's a very special institution, and so I'm pleased to be able to kind of share these perspectives. So anyway, so there were kind of 3 pivot points, I would say, along the way. I mean, I've obviously moved around a lot, and I won't bore you with all the reasons for why I did what I did, but I grew up thinking I was going to emulate my father, who was a lawyer. He practiced, for his entire adult life at a prominent firm in Chicago. And so I was gearing up to be a lawyer because I thought I would be just like him. And as he was lying on his deathbed from leukemia at 61 during my 3rd year of law school, I said, Dad, I just hate this. There's nothing about this that I like. It's not interesting. Law school professors are jerks, et cetera, et cetera. And he said, Jim, don't worry about it. Go figure out what you're passionate about and go do it. Because if you're passionate about what you're doing, you're going to be successful and never worry about money. And that was both very liberating and terrifying, right? Because I was liberated from what I thought my father wanted me to do, but trying to figure out what am I going to do now was a bit daunting. So that was kind of the first big step. And then a lot of my college classmates had gone to the street. They were investment bankers, working at bulge bracket firms, doing exciting deals and making a lot of money and living life in New York. I thought, okay, I'll do that. And so I interviewed with some of the bulge bracket firms, and they said, look, you don't really have any sort of quant background. Go get an MBA from a school that's a quant school, and then come talk to us. And so with that, I applied to Chicago, graduated, went back and started interviewing. And they said, well, you're 30, you're too old to do this. You won't have the stamina to stay up and pull all-nighters regularly, the great life of a junior banker. And so I thought, okay, what do I do now? And I really have always been fascinated with logistics and transportation in particular. And so okay, I'll go work for a large transportation company. And so American Airlines at the time probably had the most sophisticated, interesting treasury group of all the US airlines. And it was probably the most successful airline. So I went to work at American, and that started, 30 years of, doing airlines, leasing, investment banking and consulting. And that took me to about 2 years ago. And serendipity is a theme I'll come back to from time to time during this chat, but serendipity plays a huge role in your life, and you should embrace serendipity and be willing to run with things. But my wife sold her equity in a business that she had co-founded. We moved out to Denver, which is where I met Dave, and Dave Fisher, and Dave's responsible for my being here today. And I attended an aerospace luncheon, and there was a guy named Mark Sarangelo, who's one of the speakers. And maybe some of you people know who he is. I know Dave knows who he is. But Mark absolutely turned my head. He said things like, well, we're going to have people living and working on the moon by 2030. right? And we're going to have to supply them. There'll be this regular, kind of space freight train of supply going up there. And we're going to be mining minerals from the moon. We're going to be bringing those back. And so we'll have this very active cislunar thing going on. It absolutely turned my head. And so I said, I got to meet this guy. And so I spent 2 months trying to have a cup of coffee with him, which was sort of annoying because we ended up moving to Boulder and he lives in Boulder, et cetera. But we had a cup of coffee and I said, look, I've got probably one more good rodeo. I was 63 at the time. I said, I've tried to engage the 2 previous CEOs of Amtrak to say, bring me on board. I want to privatize this thing. Let's make Amtrak something that's worthy of, being a model of transportation for the United States. And of course, got nowhere. And he said, well, look, why don't I introduce you to the guy who's building the railroad in space? And I thought that was a nice segue. And that was Franklin Chang Diaz, who is the founder and CEO of Astra Rocket Company. And so he introduced me to Franklin, and there we are. So that was about 2 years ago. I formally started with the company in April of last year. So that's kind of looking at the world at the ripe old age of 65. I'm just really getting into space and enjoying all there is to do and try and accomplish there. So that's, I'd say, the summary, Garth.
Thanks, Jim. That was very well said and very insightful and inspiring journey. And can you then talk a bit about Ad Astra and Franklin? How is it working with someone like him, and just the company, the startup vibe, and this vision, which is a hard and challenging vision to attain, but it's also very very inspiring.
Yeah, so Franklin is a very unusual, gifted scientist. He's a Costa Rican U.S. dual citizen. He came to this country with $50 in his pocket. He got a scholarship at UConn in engineering, then he went to MIT and got a PhD in advanced physics. And the PhD thesis that he wrote was the rocket that he's been working on for the last 43 years. He wanted to be an astronaut, so for 25 years, under NASA's auspices, he was working on this technology. In between space shuttle missions, he did 7 space shuttle missions. And then about 18, almost 19 years ago, he took this out of NASA and started at Astra Rocket Company. And he has built the business with about 60 million of capital, which is absolutely nothing and is a stunning result, to get to a technology level readiness, TRL of 5, basically, right, on a scale of 1 to 9 in NASA's nomenclature. And basically, the technology is high power plasma electric propulsion, right? So this is kind of 150 kilowatts and higher propulsion. It's not lift propulsion, it's in space propulsion. So the rockets would live and work in space, basically. And so Mark Sarangelo said, look, I've known Franklin a long time. He's a brilliant scientist. He's a crappy businessman. So, he needs help. And NASA asked me to assess his technology. I have, and he said, Jim, this is gonna be big. It's important. It needs to happen. He needs help. So if you want me to introduce you, I will. So Franklin and I spent a lot of time together, and we whiteboarded, and I convinced him and the board that I could go raise 350 million, because that's, you need capital. These are capital intensive businesses. And my role initially was just to raise money. And, at the time, having done all this capital raising in the, airlines and leasing space, 350 million didn't seem like a daunting number. But in fairness, the company, I think the physics are known, the engineering is still a work in process. And so, there are certain things we needed just to prove the next step of the engineering. And that was going to require a little bit of money, not a huge amount of money. And so off I went with this great notion that, okay, I'm going to go raise all this money. Well, the world kind of changed from totally risk on to pretty much risk off. And that was happening about the time I started. And so I went to venture capital people. I went to rich people I know. I went to managers in private equity funds who were, for their own account. And I didn't want to involve NASA. I didn't want to, I don't really know the military at all. And I said, I don't want to be involved in the government. I just want to do this privately, and got nowhere, basically got nowhere. And so, a number of pivot points have happened over the last year and a half. We went from kind of 6 prototypes down to 2 with 1 power level. I built our business model. And unfortunately, it's the 4-year valley of death. You give me a bunch of your money, I'm going to go spend it for 4 years developing this really interesting technology. And then we're going to have this sort of hockey stick revenue and profitability plan, by the end of the decade. That's a business model I think, could be done 2 or 3 years ago, can't be done today, but that's kind of how I think it will happen. And in terms of, this is the mind bender for the group. So imagine Elon Musk, is building his big effing rocket, right? This thing that blew up, back in April. And he thinks that's how we're going to go to Mars, right? And that trip would, as far as I know, would be a one-way trip. This is not clear how you come back with chemical propulsion. It would take about 9 months to do it. And NASA and DARPA are now working on, a better version called nuclear thermal technology, which I won't bore people with. And our technology at Ad Astra would be nuclear electric propulsion. If we scale the rockets, well, I'm not there anymore. If we were to scale the rockets to, 10 megawatts and put 4 of those on a rocket with nuclear reactors, we think that trip would take 3 months, right? And what does that do? Well, if you survive a 9-month trip through deep space and you're not, radiated beyond recognition, you would get to Mars, and then you'd have to be there for about a year before the orbits would line up and you could come home, assuming you could figure out how to come home. And I think that's a big ask for, for the first trip out to Mars. So anyway, we think, or we thought, I think that the technology will be such that things and people will move around in space using nuclear electric propulsion, not nuclear thermal and not chemical ultimately. So that's kind of the business. I worked for free for a year and a half. I wasn't getting it funded because I think the environment just isn't ready for this. And so we developed a good relationship with Rolls-Royce. I think a strategic eventually is going to invest and probably ultimately buy the business. And I was just getting ready to go down to the UAE to pitch the business down there to see if there might be interest. So anyway, Franklin he's an extraordinary guy. He's 72, but he spends most of his time now raising money, which is, I think, not his highest and best use. So anyway, so I resigned about 2 or 3 weeks ago, but at the time Dave asked me to do this, I was the CFO. So I just want, in full and fair disclosure, I'm no longer, but I may still help on a consulting basis. That remains to be seen. So
thanks, Jim, for sharing that. And I don't know if, as you said, we don't have time to go into thermal versus electric and the details, but on a, switching gears a bit and talking about your entrepreneurial journey, because you have founded your own company, you have done advisory on your own, you have worked in corporate firms, big firms like American Airlines or Macquarie, which is an investment firm, and then also, the smaller aviation airlines. Can you talk a bit about, some of the leadership challenges or learnings from all these kind of diverse experience which you have got with smaller companies and bigger companies?
Yeah, so I'm probably an anomaly, right? I've moved around quite a lot, and there's a logic to every move I made. So it's not as if I went to a place thinking, okay, I'll be here for a year and I'll move on. So for example, Aloha Airlines, it was a restructuring. I just didn't realize it when I got there, which sounds sort of stupid, but that was the reality. And so look, I think it depends on your individual temperament, right? So there are pluses and minuses to large organizations and smaller organizations. There may be a view that if you're less risk averse, you go work for a larger organization. And even those aren't sure things, right? And unless you have a mentor in a large organization is pretty hard to navigate, right? And so how do you really move ahead? And so I think on balance, I was asked by our lead independent director at Astra when I met him in Montana last year. He goes, "You're not really a big company guy, are you?" And I said, "No, I don't think I am anymore." And you get is at a small company, you really get to influence outcomes, and you get to see pretty quickly whether those outcomes are positive or negative. And so that to me has been really part of the fun and the journey, but they're more risky, right? So you have to figure out what's your appetite for risk. And it can end pretty quickly, or it can be greatly successful. But the other thing I think is really important is culture, which is a really hard to quantify element of a business. And you can have a great idea in a really horrible culture, and you may still succeed, but it's a lot harder with a toxic culture. And I think with a smaller place, you have an opportunity to put your imprimatur on hires and try and create the group that's going to really be cohesive and pull the thing off. And so I think on balance, I've managed large groups of people in big organizations, and it's really hard to directly connect with everyone to make everybody feel like you're important. I'm going to look out for you. I'm going to help you advance as best I can. That's hard to do, and you can do it much easier in a small organization. So and I've done everything from startup to high growth to mature to restructuring. And I'm not sure there's it's been a full universe of things, and there are lots of stories to tell about each. But I'd say on balance for me, not working for a huge amorphous organization is probably my preference. So.
Thanks, Jim. And talking about capital raising, you have raised over 10 billion. I'm sure you have sat on both sides of the table, and sometimes our audience includes entrepreneurs and people who startup founders who are developing their own business plans or raising capital.
Yep.
What would be some of your from your experience, some of the guidance or recommendations you would have for that audience?
Yeah, I mean, for entrepreneurs, look, you've got people who are looking to invest in the business, want to see that it's a good idea, it's a plausible idea, and you have to articulate that. And so people say, okay, what are you selling? What's your total addressable market? So this is sort of what goes into the makings of the business plan, and then at least a sort of high level of how you think you're going to develop that. And then you need a team of people that investors can sort of say, okay, I like the idea, and I like the team. And those are kind of the key things that people are looking to invest in. For space, what I found pretty interesting is you can talk to people about space, and if they're not really already into space, they look at you like, are you smoking something, right? Like, what are you talking about? This is just crazy stuff. It's fantasy stuff. And I think we're kind of beyond, for 10 or 15 years ago, maybe, these are way out there. But now, we're really blocking and tackling and putting together technologies and companies that are going to take us to the moon, maybe not by 2030. And then the moon's going to be a stepping stone to Mars, which in theory is 2040 and beyond. And that, nothing goes in a straight line in space. So, those timelines may not hold. I'd really say, you want to got to convince one or two angels, smart people with a lot of money, to say, all right, I'm going to give you enough to get you going. And then the other thing I've learned is, don't try and stiff arm NASA or the DoD. Go write the grants, as painful as they are, get some SBIR grants and smaller money so that people say, okay, you're being validated by smart people who are in the know, right? mean, most investors are generalists. VC people are generalists, and they want to see that, there's an imprimatur, or at least, somebody at NASA who's, really smart says this is worth, putting, our government's money to work. And when you get those pieces together, put your team together, and then, run really hard. I think that's the, the formula. And so I've learned in the last year, Franklin's business, it's been around for a long time, and that's both a blessing and a curse, right? It's been around so long that people are skeptical that it's real. And that's some of the pushback I got. And it's not really, so early stage that, venture capitalists can say, I've got something I can see coming to market in 12 to 24 months. That's really the time frame now for venture capitalists. The other thing is, make sure, and this was actually a pretty interesting point that an investor at Seraphim Capital, which is a pretty active space venture capital firm, shared with me about a month ago when I was in London. She said, look, what you're doing is you're building for a market that doesn't exist yet, right? And so that's another layer of uncertainty. Fine, maybe we're going to be on the moon in 2030. Maybe if Boeing can figure out how to build things again, we'll actually get Artemis on track to get us there in 2030. But maybe we won't. And so maybe 2030 is aspirational and it could slip. That's a clear risk. And so if you're a venture capital investor, they want to see something, marketable in 24 months. And so when I come to market with a, 4-year valley of death, that's pretty hard. So anyway, a lot of thoughts there, but it's important to have, some early backing with some deep pockets, as well as, put your idea on paper, make sure it's plausible, make sure you believe in it and you can sell it as sincere and that your heart's in it. And then, find a group of people you really want to work with and go run with it. That would be my advice.
Thanks, Jim. Very, very helpful. And, across your experience with all these different companies, investors, do you have the one which you like the most? Which was the most exciting experience which you had, and why was that most exciting?
Yeah, there was one, and there's really no perfect place to be, but I would say Air Lease was probably my most exciting. And the reason it was as exciting was because we did a ton in a hurry, right? And so I was there for 2 years. I was working for the so-called godfather of aircraft leasing. He's a Hungarian guy who's, not tall on stature, but big on ego. And it was a bit of a cult culture, very, very difficult culture. And I was the only outsider he brought in. I was the CFO. I joined the company on the heels of the financial crisis. He had created a global leasing platform. He's very good, by the way. I don't mean to just denigrate him, but very difficult human being. He had sold his company to AIG, which of course was, the poster child for everything that went wrong in the financial crisis. So he took, kind of the best people out of his prior company, started Air Lease in, I think, March of 2010. I was employee 11. I showed up, he said, great, pack a bag, we're going on the road. We're going to go raise $1 billion through a 144A transaction by the end of the month. I said, okay, cool. So off we went, running around, doing all these presentations. And after about 5 days, he said, well, go back to Los Angeles because we also had to raise, there were mutually dependent closing conditions. We had to do a large corporate debt facility, a warehouse facility. And that was $1.5 billion in size. And it was being led by Credit Suisse. And he said, we're nowhere with that. We got to get that done. So I went back to LA and there were a lot of commercial issues. It really wasn't in good shape. And I didn't sleep for 5 days. I mean, I just worked through this. We closed at the end of April. So we pulled in slightly less than $2.5 billion of startup capital. And then, you know, following through, we did an IPO 12 months later. And so, you know, I helped lead that. In total, we did, as you mentioned, about $5 billion in capital in 2 years. And I just, you know, I would say the really cool thing about this, if you're a CFO, you know, there was a lot of stuff going on. We looked at acquiring a platform, so there was some M&A. But for a guy who's more of a strategic person and somebody who's good at raising money, this was a, you know, absolutely wonderful experience. In 2 years, I got the experience that most CFOs don't see in 10. So I would say that was probably, you know, my most exciting. But, you know, after 2 years, I said, you know, I'm a nice guy. I don't need to work for this guy anymore. So I quit. So anyway.
Oh, that is, you know, that is very exciting, and I'm sure must be very stressful. How, I don't know if you want to talk about how do you manage all the stress, you know, being in that kind of a role. Do you have any tips, guidance around that?
That's a hard one. I mean, you know, you just got to keep believing in yourself. And this is a guy who just, well, I won't go into it. He would send some zinger email messages in the middle of the night, and I would, you know, wake up. We had Blackberries back then, and I'd wake up, read these messages, and I just think, you know, what is this guy's issue, right? But we had a very strong board. The head of the comp committee ran Northrop Grumman. And he and I got to know each other quite well. And the audit committee chair ran Hilton Hotels, and he's been on American's board. So, you know, there were things about that were, you know, really quite rewarding. As I said, you know, in kind of one of my life lessons learned, he didn't pay me as well. We never think we're getting compensated as much as we think we're worth. I think that's a fair statement. Nobody would take issue with that. Within a certain boundary. But, you know, if you're making $10 million, you're probably saying, okay, I'm probably getting compensated. Okay. But if you don't have a lot of autonomy and you're constantly under a microscope, you're going to leave, right? It's just not fun, and you don't have to do that. And so that's kind of where I felt I was. And so finally, you know, there was one thing that he did, and I just said, I can't do this anymore. And I literally walked out the door, which is unusual for a public company CFO, but that's what I did. And so, you know, kind of one of those, you know, takeaways that I would encourage everybody who's listening in on this, especially, you know, MBAs and MBA candidates and people who are coming out of college. You know, you got one spin on the planet, and if it's not enjoyable, if it's not fun, if you can't make a place work for you in a way that you want it to, don't waste your time, right? Get out of there, go do something else. And so anyway, I managed to a point where, and there were some crazy exercises I had to go through that were self-inflicted wounds, not self-inflicted by me, but by him, I would say. And I just, you know, as I say, the benefits, the velocity of the things that we did was exciting. It was a great experience, but you know, it's like, okay, after 2 years, I'm done. Time to move on.
Thanks, Jim. And you know, you mentioned boards. Can you talk about a bit of your involvement in boards? What are the key considerations, you know, for being on the board? Any guidance for, you know, any of the audience who interacts with the board on a regular basis? What are the things to keep in mind?
Yeah, well, look, I'd love to do more. I did some when I was younger. I was almost put on a board in 2018, a big leasing platform, and that's a long story, but you know, a shareholder blew up and had to be replaced, and so that opportunity was taken by the new investors. And I've done some advisory board work, and I've been on the other side. Obviously, I've been, you know, keeping boards apprised of what's happening in the company. And I would say, you know, if you can do it, go do it. It's a wonderful perspective, you know, to be able to sit, you know, and see how the company sits in its competitive framework, what its strategy is for, you know, dealing with its competitors, where it's going to grow, where it hopes to go, and helping the management team think through, you know, the bigger issues. obviously, if you're an audit committee chair, it's historical, and you've got to get all that stuff right. But that's an interesting, bit of work where you actually have to know a few things and participate. But I found, some of it's a big production every quarter to deal with the board meeting, but it's also a very rewarding one because it's pulling together a lot of information. And I've found I've had great relationships with a lot of board members when I've been in a management role. And these are pretty smart people, and they're obviously they have their shareholders interests at heart. They have to look after the shareholders, but they're curious and they have a lot of perspectives. And I sure don't know everything, and it's been really rewarding to get to know a lot of these very clever, successful people and learn from them. But I would say if you can sit on a board, it's a perspective that you just don't get when you're in the trenches, and not necessarily even when you're in the C-suite.
Yeah, thanks, Jim. And I don't know if I wanted to ask one more question on what are you thinking next? You have a lot of passion for space. Going to Moon and Mars is not going to be easy. It will take time. What are your thoughts on what's next?
Yeah, no, look, I'm hooked on space. I actually was able to chat with Pam Melroy yesterday. She's the deputy head of NASA, and she's known Franklin a long time, and I wanted to debrief her on kind of what had happened. And I said, Pam, there is so much interesting work going on now. And this stuff isn't fiction anymore, it's real. And we've got a lot of things to fix on Earth, but I think we can learn a lot, and there's so much to discover and see in space. I said I'd love to be able to continue. I'm 65. I gotta tell you, I feel like I'm a kid again. I just feel like I'm getting started, and if I'm healthy and my brain holds up, I want to work for another 10 years. And whether that's sitting on boards or being a CFO again or being a COO, I'm really quite excited about it. And it needs a lot of capital, right? People talk about $1 trillion space economy in 2040, and that's great. I don't really know what that looks like or whether that's a good timeline, but we need to raise a lot of private capital. And it's not going to be just Jeff Bezos and Elon Musk, right? To go to Mars is going to take billions and billions of dollars. And my fear, we may have some technical failures. Everybody wants to go into space and fly up to these space stations that Blue Origin and Northrop Grumman and others are in the process. There are various undertakings going on there, and if we have a high-profile mishap, that's going to set us back. So we have to keep pushing ahead. And I'm glad Artemis was finally able to launch last year. I mean, it's hugely over budget and it's very costly, but that's really that is the program that's going to take us back to the moon. And when that gets delayed, everything gets delayed. But one of the big things that we need to do is to clean up what's and I'll finish on this. We need to clean up what's in low Earth orbit, right? And Dave's former company, expects to play in the forefront of that. We've been shooting stuff up into space for decades, and it's careening. A lot of these big things, second stage rockets are careening around at 17,000 miles an hour and potentially crashing into things. And we've got to get this cleaned up. My NASA advisor at Astra said, Jim, if we don't figure this out pretty soon, we're not going to be able to shoot people up into low Earth orbit. It's going to be too dangerous. And if we can't get off the planet, then where are we? So with that, I guess I'll stop. I guess people are queuing up for some questions, but I'm super excited. So I'm happy to help younger companies. I don't know if I can work for a bigger organization anymore. Geezers in space seems more acceptable than geezers in commercial aviation. So we'll see.
Thanks, Jim. I don't think you are a geezer or anyone else, but we'll take the questions. I did have some more, but we'll take the audience questions. Robert, do you wanna go off mute and ask your question?
Yeah, thanks. Jim, this is a great talk. I get when you were going through your background, I was kind of reminded of, I think it was Omar Bradley who said something like, amateurs talk strategy, professionals talk logistics. And so kind of along that vein,
Yep.
I think when folks, lay people anyway, when they think about space, they think about the technical issues, the engineering. And I guess from where you sit, what do you see as kind of the main sort of hurdles to the commercialization of space? I mean, is it more the capital? Is it supply chain? Developing the human capital? I mean, what do you see as the main
Yeah,
opportunities?
yeah, Robert, that's a great question. I think in-space logistics is going to be the key, right? So I've gotten to know Bob Smith at Blue Origin pretty well. He's the CEO, and part of this was validating what I thought our business plan would be. And I do think our type of propulsion will be absolutely critical for how things move around, even in cislunar orbit. It's funny. I met the head of United Launch, Tori Bruno, a little over a year ago. And he said, "Why do I need you? Right? I'm going to go to the moon using chemical rockets. I don't need you." But as we talked for an hour, he came back and said, "Well, I don't really know how we get home." And so when I was talking to Bob Smith, I said, "Bob, what about the railroad? When we have people living and working on the moon, how do you supply them?" And he said, "We're going to have to touch the moon once a month. So figure that's at a minimum 12 rocket ships, and you're going to want redundancy in your propulsion system. So that's 250 kilowatt rockets that Ad Astra would be building." And I said, "That's perfect. That validates kind of how I'm thinking about things." So I think there's a lot going on now. Obviously, the satellite buildup. Right now, space commerce is launch and satellites, right? But I do think we have to figure out how we clean up what we've got up there, because it really is super critical. And then as we move into cislunar orbit, we have to figure out, okay, how do you power these things, right? So 150 kilowatt rocket would need we need electricity to run our rocket. And we're kind of agnostic, or Ad Astra does. We would be agnostic about how you power that. And so when you're close to the sun, solar panels will work, but for that kind of power, the solar panel size would be like a football field. It's totally impractical. And so, creating nuclear small fission reactors to operate in space, that's going to be a big challenge, and that's coming in the next 5 to 7 years. We're working with Rolls-Royce. They build nuclear reactors for the British Navy. They know how to do this stuff. They've been given a small grant by the UK Space Agency to do a study about how to build a surface reactor for the colony in space. I think you're going to have nuclear reactors powering whatever ends up on the moon. And then ultimately, when you go out into deep space, you're going to need pretty powerful nuclear reactors to run the engines that do that. So a lot of money, right? And I think the Rolls guys were, the human capital stuff. I think there's plenty of interest now. There's still a lot of buzz. I think this capital blip is eventually going to go away. People are going to realize, okay, the world hasn't completely fallen apart. So I think money will start to flow again, but there are a lot of people, kind of on the ropes right now. But in terms of human capital, I was at the Space Symposium in April, and a Rolls-Royce participant on a panel said, "You cannot imagine the recruiting tool we're having, saying we're going to build nuclear reactors for space." He said people are lining up to come work for us. And so I think if you have an appetite for space, if you're a younger person looking to get into space, this is a great time to jump in and go to work for some of these, even if it's for a big prime, just to get your feet wet in the short one. Does that help?
Oh yeah, great, thanks.
Thanks, Robert, for the question. And Dave, do you want to go off mute and ask your question?
Sure. Thanks, Gaurav. Hey, Jim, thank you so much for being our speaker today. I had a question. I wanted to dig a little deeper into, the really tight funding market that space companies are seeing right now. Pre-pandemic, it seemed like the money was flowing really freely. Now it's tightening up. And I'm wondering, in your opinion, and from what you've seen, if that's just sort of more tied to these bigger macroeconomic things, or is it maybe people are getting cold feet about space? There were so many SPACs in the 2020, 2021 reign that they've disappointed if they haven't completely failed. What's your sense of where the tightness in funding in the space industry is, and for that matter, if there's any reason to have high hopes in the coming months? Yeah.
Yeah, so it's funny. So I think it's a bit of both, Dave. I think there's a souring, a lot of business models got funded that, I think I won't say they're shams, but I think they are not near-term businesses, right? So I look at the eVTOL space, right? A lot of these companies did SPACs. They got tremendous amounts of capital, $1 billion plus of capital from regular institutional investors. These weren't just venture capital firms at multi-billion-dollar valuations, and they're off spending the money. They're building these ships, and I think you can build the machine, but until the FAA says it's okay to fly these things autonomously above crowded urban areas, there's no business, right? And I don't see that materializing anytime soon. So that was the late 2020s, and it's funny because Greg Smith, who's a friend of mine, he was Boeing CFO for years, and he recently retired. And I was trying to get him to invest in our company, and he bought a stake in Sierra Space, right? And he sits on the Sierra Space board, and we were talking, and he said, "Well, I was talking to a Sequoia Capital partner, who's involved in Sierra Space at a board meeting." And I asked, "Well, why did you do this?" And he said, FOMO, which is short for fear of missing out, right? So it was this herd mentality. We got to do this, or we're going to miss out on this great opportunity. Yeah. And 5 months later, the same partner said, if any portfolio company isn't generating positive cash flow, we're marking it down by 70% in terms of valuation. So it's a funny how quickly these things pivot. And another example, I saw Tom Weiss at a Jefferies conference a couple of weeks ago, the day after I resigned, in fact. And we caught up, and he said, "Jim, and he's been struggling, right? It's not easy for him to raise money either." And he said, $1.4 billion back in November of 2021 seemed like a lot of money, and maybe I should have taken a bit more, right? And so what's happening is people are spending more money than they had expected, right? Some companies have had some technical failures. So Virgin Orbit, right, had a failure, and its $3.5 billion SPAC blew up, and it closed, and it sold its assets for $36 million earlier this year. So it's almost an overreaction the other way, I think. And so I'm just hopeful we can keep moving forward. We'll keep having successes. Rocket Lab had an anomaly a few days ago on a launch. So it's not perfect. There is risk, and things are going to continue to be problematic. But if we keep moving forward, we keep having these victories, I think the money's going to come back. It just has to. So anyway, but it doesn't help that we've had supply chain issues. I think Greg Smith said to me, we can't do the Dream Chaser because of wiring harnesses. That's keeping us from testing in space, and those harnesses come from Ukraine. So it's that sort of thing. So and it didn't help the venture community that Silicon Valley Bank blew up in March, right? That sort of put everybody on their hindquarters. So it's a lot of things it's a confluence of a lot of things, and I'm just hopeful that we keep moving forward, and I think it's a great opportunity for strategics to sort of look at some of these companies that are struggling for capital and to say, I'm a buyer, right? And to take on some of these technologies that are interesting and need to move forward. So,
super. Thank you, Jim.
yeah.
Brian, would you like to come off mute and ask your question?
Sure. Again, thank you, Jim, just to echo what was said, for taking the time to talk to us. So I was wondering more on the geopolitical angle, how that impacts the funding environment, since it's historically been so closely tied together. In China, there's a few launchers. Galactic Energy just had that mishap a few days ago, but they've got a few. And in India, there's that huge surge in interest in funding now after their moon landing. So if there's any push in the US for more involvement or anything, how do you see that impacting the private sector markets and private sector funding of the space sector?
That's a great question. In the 60s, I was old enough to remember when we went to the moon, and I met Neil Armstrong at a function, pretty close to the end of his life. So there was a lot of buzz, and the buzz was, it was the Soviet Union. That was the boogeyman, right? And now we have China, right? China is making huge advances they've built a space station. They're going to go to the moon, and it's quite possible they'll get there before we do, right? Because not that I'm a fan of autocracy, I'm not. I think our system of government is the best in the world, but Xi Jinping says we're going to do this, and they do it. And in fact, they are mimicking, they're working on the technology that Franklin's working on, right? And so they can just decide to do things and throw money at it. So I think it's China's the new Soviet Union, right? And they're very capable, they're very smart, and they're on it. And so I think that's spurring Congress, certainly, to provide funding both for civilian and for military. So I met the CTO of the Space Force, and he said, you are absolutely in our zone of interest, right? We need to be able to move all that secret stuff they have up in low Earth orbit. We need to be able to move that stuff around, in unpredictable ways and in a hurry. And so, Orbit Fab, which is making space depots, right? Gas depots in space. I've gotten to know the CEO of Orbit Fab, and he said, Jim, we should do a joint, submission to Space Force or the Air Force and say, look, if we get into a shooting war, they're going to be targets on these space depots, fuel depots. So we should figure out how that works. So I definitely think you can imagine kind of a Star Wars on the moon, which is sort of sad to think, right? You can imagine we'll have a military presence there to guard whatever it is we're working on. It seems like the South Pole is where everybody's angling to be, and so who gets there first and who establishes the beachhead? It's going to be very important. But I do think, to your point, I think the geopolitical stuff is going to drive this, as it did back in the 60s.
Thanks.
Mm-hmm.
Thank you, Brian. Jim, I know we have 7 minutes. We do have one more question. It seems to be a tricky one.
Okay.
I don't know if any thoughts on that. Stephen, do you want to come off mute and ask the question?
Yeah, absolutely. Simple question. We were on the moon in the 1960s, and we're having trouble to get back. I'm not understanding it. I'm not a scientist, but would like to know in layman's terms, why is it taking so much difficulty to get back to the moon? Why is China going to get there before we do, if we've 60 years ago?
Well, that's a great question, right? I think, part of this is the ebb and flow of interest in space, right? I don't know how old you are, Stephen, but the world was really supercharged about when we went to the moon. That was a huge deal, and it really galvanized this country for the better part of 10 years while this is all being developed. And astronauts were heroes, and this is the coolest thing ever. We got to the moon, and then, we had Apollo 13. We had issues. It was an expensive program, and I don't think there was enough of a feeling that there's stuff that we need to do and take out of the moon. And now I think, look, there are technical issues. I sort of took a swipe at Boeing, and I think it's a well-deserved swipe, right? They're one of our main primes, and they're not building things well right now. And okay, things are complicated. These are big technical things that we're putting together, and you're going to have some setbacks. But the next phase of Artemis, is to have a manned mission around the moon, and they're having trouble building a space capsule, and it's it's $1 billion of overrun, and it's at least 9 months delayed, and so that's a problem. But I think now, so that's a technical issue. But I think in terms of why it's important to go to the moon, when you think about the moon separated from the Earth over many gazillion years ago, and its mineral composition mimics that of the Earth. And so there is stuff up there, we believe, that's pretty important stuff, strategic minerals that we think, we can get there. Whether we can mine those minerals, efficiently, that's part of the space commerce question, right? But, we're going to have, a beachhead in low Earth orbit. We're going to have, a station that orbits the moon, and we're going to have a lot of traffic between those two areas. And so, who gets there first, I think, actually matters. And so, having a legitimate competitor now is a good thing. I think that's gonna spur public interest. And I think the one thing that Congress seems to be able to agree on is that we don't want to get rid of the lead in terms of our military and to a lesser extent civilian technical competence and leadership. And so I think that's going to drive funding going forward. But we got to keep succeeding, right? We got to keep having these milestones and keep showing that it makes sense. And right now the Artemis program is hugely overrun, right? And it's cost like $4 billion to launch one of these things, is the number I've heard going forward. And when you think Elon Musk is launching things at, well under 100 million a copy, it puts it in perspective. So, the technical development, I think, will continue to be important in terms of driving, funding going forward. I don't know if that answers your question, Stephen, but that's what I think is relevant.
Thank you.
Thanks, Stephen. And we have 3 more minutes, Jim, and would be good to close it with where we started, which is UChicago and your Chicago booth connection. Can you briefly speak about how your booth experience has shaped your career, your thinking, and any closing advice or guidance for the audience?
Yeah, well, there are a couple of things. I mean, I actually learned a few things in business school, right? So I was very happy. I got an A in corporate finance from Merton Miller, which is that was a good thing. I took cost accounting and hated it, but I actually used it to develop the business model at Astra. But I think the most important thing about business school is really the people connections, the network that you make. And unfortunately for my daughter, she had 1 quarter on campus and the rest was remote. So I would say for those of you who are aspiring MBAs or getting your MBAs right now, just make sure you're really getting to know, find that cadre of people that you really like and are smart people, and stay with them, right? Keep on top of each other as you go forward, because you never know what may turn up 20 or 30 years down the road. That's really important. And then I would say, don't necessarily go into a big organization if you don't have to. I would say, if you're not burdened with a lot of debt at this point, go do a startup, right? This is the best time in your life to take some risk and really, you'll learn a ton. You'll learn a lot more at a startup than you will actually working for a big organization over the same sort of time frame. So I guess those would be. Oh, and I met my wife. Sorry, that was the that was the big takeaway. Is I met my wife at the GSB, as we called it back then. So.
Thanks a lot, Jim. Really
You bet.
appreciate you taking time. I think I learned a lot from this conversation. I'm sure everyone in the audience learned a lot. Shannon, did you have any, or Dave, did you have any closing remarks?
Yeah, that was excellent, Jim. Yeah, thanks so much
Thank
for
you.
taking the time to chat with us today. And yeah, and answer all of our questions.
Very welcome. Thank you. Glad to do it. And
Thank
if
you.
people want to reach out, about anything, please feel free. You can find me on LinkedIn, and you can talk about space forever. I mean, it's obviously a lot of fun, and it's an important, important avenue for us in the future. So I'm happy to, meet with any of you or chat with you, what have you. So anyway, thanks a lot.
Thanks
Okay.
a lot, Jim. Speak
bet.
soon.
Take care. Bye now.
Thank you, Jim. Bye-bye.